My friends, what is going on? Hope you're doing well. What an interesting, mild way to put it. What an interesting last few weeks we have had. Particularly, really just, since Trump officially took office. I threw out there on Twitter, which if you haven't done so, or X, or whatever you want to call it, still pretty much always call it Twitter, to do 1,000 likes, and I would drop a weekly Outlook video for you. You guys did your part, and I want to do my part. I'll be honest with you, I sat down to make this video 2 different times and stopped it only because it was like, I just feel like my head wasn't where I needed to be. I needed to do right by you guys to give you a great video. So for the first time in a long time, I actually made myself some notes here that I want to go over, especially in the introductory part of this video. If you haven't done so already, you know the deal. Like and subscribe. Nothing about this video is direct financial advice. I'm only making these videos to try to help you make great decisions for yourself, your family, and your portfolio. The reality is ever since COVID came around, this is the first time that a lot of people, if you weren't trading during COVID, and I was a new pup in the market at that point in time. I've been in the market since 2005, but was never really actively managing my own positions. It was more of just, kind of your typical retirement accounts, throw some money in there each and every year so you get some tax deductions, stuff like that. But as far as paying attention on a day in, day out basis, actively trading, participating in the market, COVID for me was just kind of one of those. And honestly, maybe I was just too stupid in that point in time. I told this to my Discord that I was so stupid maybe that I just didn't know any better. That it was, markets were crashing. Lots of stocks were, 50 to 70% off the highs that they had just recently seen. And I was kind of like, well, this is stupid and this is crazy. We're gonna pull out of this. Why wouldn't I buy something that's, dropped 60, 70% in value? Even if it just recovers to where it is, that's still a great return on my money. And so I did. I wasn't ever, panicky or anything along those lines. And the reality is there's always going to be opportunities like this on the market, guys. Whether it's COVID, whether it was the bear market that we saw when Biden first took over, whether it's the tariffs that we see now, whether it was the great financial crisis of 2008, the dot-com bubble of 2000, there's always going to be extreme pullbacks in the market. So I always look at those as opportunities. One of my favorite sayings about the market is, it's the only place where everything goes on sale and nobody wants to buy anything. So it always falls back to anybody who's followed me for any amount of time has seen me post this quote before where it just says, when it's time to buy, you're not going to want to. And when it's time to sell, you're also not going to want to. The reality is when Trump first got elected back in early November and the market just started ripping out of its mind, everybody was pissed that they didn't buy more, right? And now we're back, let's see here, we're back below, well below, since that happened, let's see here, because the market was at 571 at that point in time. It was over 65 points below that. And the reality is most people are like, dang it, why didn't I buy more? I knew Trump was going to win. And now everybody's like, dang, thank goodness I missed that buying opportunity. Or, unfortunately, a lot of people probably piled in up here at the tops when it was clearly throwing off distribution warning signs. So here we are at a nice pullback. The reality is we are only 15 points from technically being in a bear market. So right now we're sitting at a 17.75% pullback. Bear market territory is once we hit 20%. And I was actually looking up what's the technical definition of crash, and obviously I knew the one for bear market, but there's really no technical definition for a crash. The most standard one that I found is it's the same thing as a bear market. It's a 20% pullback. It just happens in a much shorter period of time. Where this, the bear market that happened underneath Biden was kind of an obvious, very controlled walk down of just a series of lower highs and lower lows. Where what we're experiencing right here with Trump, especially over the last couple of weeks, has, for the most part, been straight down overall. So it's kind of that, going back to that crazy unprecedented times. We really haven't seen this type of pullback or drawdown since back over here at COVID. Let's see here. This last week was a overall 9% drawdown. Let's see here. COVID that week was 11%. That week was a 9%. And you know what timed the bottom was the worst week, minus 15%. And then the very next week, it goes up 10%. So I wanted to read you guys this quote. I was watching some highlights of Houston's miraculous comeback against Duke last night. And the Houston head coach, Kelvin Sampson, had a quote that said, "The way you train and how you prepare when no one is watching will make you ready for the moments when everyone was watching." He was talking about a star player drilling some timely late free throws. And talk about that player shoots like 150 free throws every single day. And he was like, yeah, I was confident in him because he puts the work in. And this goes back to what I always tell my team in my Discord, where I talk about how you have to put the work in while the market is closed. You have to have some trading plans in place while the market is closed, so that way you're prepared and you're ready when the market is actually open. At that point in time, all you're doing is executing your plan. You're not sitting around going, oh my gosh, well, we'll just wait and see what happens. I'll just wait till the market is open and then I'll do whatever I want. That's a great recipe for losing money. So please make sure that you are prepared and ready. If you plan on doing any selling or doing any buying, I am all for it, so long as you have a plan in place. A little bit about myself personally this week. I don't always make the best decisions, but one decision that I made that was really good was I sold a bunch of my Tesla back up in the upper 450s, enough to take my entire side of the family, and my wife's side, all the men on my wife's side and my side of the family, to the Masters golf tournament. And that's this upcoming week. And honestly, I'm not going to sugarcoat it. I know I'm going to enjoy myself. I know it's going to be the trip of a lifetime, but also too, I'm like, really, why is this having to happen while the market is like crashing right now? So I will be both on Wednesday and Friday. You're not even allowed to take your phone onto Augusta National. And so I'm not going to lie, I'm going to be stressed out a little bit. I know I'll enjoy my time there because time, anybody who's followed me knows I always talk about how time is the most valuable thing that you have, and this is, I don't know if I'll ever go back to the Masters. I certainly hope that I will, but I don't know that. So I'm definitely going to enjoy myself, but it's going to be stressful, especially if the market doesn't show some signs of slowing down. Whether it consolidates, rips back up, we'll wait and see. I'm going to kind of lay out my thesis for that, but I won't be around, so that's a little nerve-wracking, but it'll all be good. But like at the end of the day, these are all about opportunities being created. So there's going to be some certain stocks that I will certainly place some buy orders in. When I get back to the hotel late at night, I'll be like, oh sweet, it filled, or oh sweet, it didn't fill. And either way, if my buy orders fill, I'm going to be happy because I'm buying an asset at a price that I'm willing to buy at. And if my buy orders don't fill, then that's also awesome, because that means price didn't fall to those levels. That means my longs that are already in the market are doing better than what I thought that they would. So I kind of look at those as sort of win-win situations. And I think that's what you have to do at this point in time. I think you have to, unless you truly believe that Trump is the devil and the world is coming to an end, because here's the deal. I always buy when things get ugly like this, because it goes back to that saying in the market of when the missiles fly, you must buy. Because if Trump actually does in the world and the stock market just absolutely tanks and crashes and we're in a bear market and we're going to prices never before seen, that kind of crap, then I'm going to have a lot more things to worry about rather than, my Tesla stock dropping. And the reverse is true. If you don't believe it's the end of the world, I put on X yesterday that so far both myself and you, if you're watching this video, and the stock market have all made it through 100% of our worst days. And we've all had those moments. I can remember very clear moments in my life where it was just like, this is it. This is over. I can't go on. Nothing's ever going to get better from here. And yet here we are, right? Think about how many things, maybe even just a year ago, you were super stressed out about that just never even came to fruition or worked themselves out. My wife and I talk about this frequently, that when we first got married, we were so broke, we were too stupid to be scared about how broke we were, but we always figured out a way to eat. We always figured out a way, well, not always figured out a way to get every bill paid. There were many months I did a terrible job of that, being a steward, but we made it. Right? I didn't have to file for bankruptcy ever, even though I thought I would. It was just, we made it. So that's my overall message right now, is I think we're going to make it. Can we go lower from here? Yes. I'm actually going to lay out some targets for that. But do I think that we are eventually going to recover? I mean, I remember in 2008, the world was coming to an end. I remember in 2020, the world coming to an end. I remember the bear market where, everybody was just only talking about all their downside targets. Nobody was ever talking about topside or the future. And it goes to show how easily we can get so short-minded and not focus on the long-term game. So, I recently went to a seminar with a guy named Ryan Dietrich with Carson Wealth. And if you haven't, you can follow him on Twitter. He recently followed me as well. He's a great guy and a very good market analyst. And one of the stats that blew me away when I went to his seminar to listen to him talk was that you cannot, for your long-term portfolio, you cannot miss the 10 best days in the market each year. He gave the example that if you missed the 10 best days in the market each year since the year 2000, you actually have a negative return on your portfolio during that time. So missing just the 10 best days of the market each year drastically impacts your long-term wealth. So you just cannot afford to miss those. It goes back to the saying of time in the market beats timing the market. You cannot afford to try to play cutesy. And he also talked about how the 10 best days in the market usually also happen around the 10 worst days in the market. So we're experiencing some really bad days right now. But I personally, you do what's best for you, not financial advice, of course, but personally, I believe if you didn't already sell, then this is a foolish time to sell. When we're experiencing, 50 to 60% pullbacks and a lot of these names that have been running really hard, I think it's a foolish time to sell because you're running that risk of missing those 10 best days if we are close to a bottom. So, me personally, anything that I hadn't sold already, I'm not going to sell. I am only looking to add. Now, I want to be very clear about this. The only thing that I'm looking to add from individual name standpoint is something that I'm excited about owning for the next 3 to 10 years. Me personally, my long-term horizon, when I buy a stock, always needs to be a 3 to 10 year outlook if, and I want to be clear about this, if it's not something that I'm looking to do just as a swing trade. So for instance, those who follow me and watch my video on Gorilla Tech, GRRR, never put enough R's in there, this was nothing more than a swing trade for me. I bought back over here at 25 and rode this thing all the way up to, I closed a little early back here. I closed at like 36, 37 back up here. And so while I'm still keeping track of what's going on it, it's not something I was married to. I only did it for a quick swing trade. It was not a 3 to 10 year outlook. I didn't really care anything about the company, that kind of stuff. So for me, right now, I only have 2 stocks that fall into that category. One of them is Tesla. Anybody who's followed me for any amount of time knows that I'm a big time Tesla bull, even though I hate the culty culture that comes with that stock. And some of the propaganda accounts on X and Twitter that are just nothing but cheerleaders for it. That kind of crap drives me crazy. But I love and I believe in the company. I own their products. I use their car every single day for the most part. They're working towards a future that I want to see. A lot of the things that Elon Musk does, and I want to be clear about this. I don't agree with everything that Elon does or says. There's a lot of times I look at some of the stuff that he says or does as an investor with millions of dollars locked up in his company, and I just go, oh my gosh, are you really saying this right now? It's kind of like Trump from a standpoint of there's a lot of things I like about Trump's policies, but I despise the way that he acts sometimes and the way that he talks sometimes. It's just flat out ridiculous. I do go to the camp of like, if this dude would just act presidential with these policies, I would really like the guy. I like his policies. I am definitely more of a conservative than I am more liberal. I'm kind of one of those like fiscally conservative, but I think people should be able to live their lives as long as they're not harming anybody. But I say all that to say I don't want this to turn into obviously some political rant, but when it comes to those companies that you believe in for the long haul, you don't have to agree with everything, but for the most part, you need to like the business fundamentally. You need to like who's running the ship. Its leadership is important, especially in uncertain times where that's what we're in. That's what we're seeing such a huge drawdown right now, is because we're in such uncertain times. So those are the questions that you need to ask yourself. So a big question I'm getting both on X, in my Discord, through Twitter DMs is now the time to buy? And the answer is, I don't know. Okay? But here's the way I'm approaching it. I mean, if you follow me, you saw that I bought Hood at 35 on Friday. I made a video about should I buy, hold, or sell a stock. Once again, you can also find that on my Twitter. And I just talked about how originally I bought Hood at like 45, 46. And I actually bought some this week. So I had some puts sold at $40 on Hood, and which was really like buying at 38. Plus I bought another 500 shares. So I'm up to about 1,200 shares total. And even though I'm down on my average, I'm excited to keep buying if it keeps dropping. I talked about how I want to build out my position anywhere between 10 to maybe 15 to even 20,000 shares on Hood, because it's a company that I really like. Not a huge fan of the leadership. Vlad obviously did some very shady stuff back in January of 2021 when it came to all the meme stocks. But I think it was pretty much his hand was forced. A lot of people were caught offside at that point in time. But I love their brokerage. I love the fact that I'm getting 4.5% on my cash. I love their credit card. I like their whole ecosystem. It's the same reason to own Apple back in the day, is they were constantly innovating. They had a great ecosystem that worked with each other. So there's lots of things that I like about Hood. And the way I look at it is 3 to 10 years from now, do I see this company potentially 3 to 5xing from where they are? Because when you own an individual company and you're susceptible to the news and to earnings and everything like that, and the swings are going to be wilder than owning, just like an ETF or an index fund, I think your risk to reward needs to be much better. So I always look at it, do I see this company potentially 3 to 5xing from here? If the answer is yes, and I want to be a part of it, I buy. Now, to the swing trade aspect of things, is now the time to buy? Is it time to buy the dip? I think from a long-term perspective, absolutely it is, if you believe in it. If it's swing trades, or is this the level that I, full poured into a bunch of zero DTE calls? No. When it comes to the trading aspect of thing, the day trading, the swing trading, I would rather be a little late to the party than be too early. Meaning, if we keep dropping from here, in my long-term holdings, I don't really care. I'll be excited about the sell. When it comes to day trading or swing trading, if I want to play the upside, I need to see a clear sign that big money is showing me it's okay to go to the top side at this point in time. I do think we're getting to the point where the risk to reward is top side, not short side. However, I think you need to be careful. I always talk with my team about making 80% of the move. So for instance, if the move back topside is this, I ain't trying to be here and I'm not trying to be here. I'm trying to go from here to here. I want to make the meat of the move, and I'm okay if that's all I get of it. You can still make, trust me, you can still make an insane amount of money doing that. So, having said that, let's start taking a look at SPY. So SPY on a weekly basis is a pretty broken structure. That closing below that 510, which was my target level for my impulsive move down 3, I mean, we still wound up closing 5 points below that. When there's extreme times of volatility, when we've got the VIX up here pumping and closing at high of the day of 45, there are going to be extended moves on both sides. And when the market is this volatile, I like volatility. Most people don't. Most people think I'm crazy. You know, every time I post a several $100,000 win or a $100,000 loss, people are like, you're crazy, you're stupid, you're degenerate, you're a gambler. And yeah, have I lost hundreds of thousands of dollars in the market? Yes. Have I made millions of dollars in the market? Also yes. So I'm okay with the risk to reward. When I buy options, I price everything to zero. Obviously, I hope it doesn't do that, but I'm okay if that's what happens, because that's the risk to reward that I look for. A bunch of people saw I turned $26,000 into $265,000 in an Nvidia puts just a couple of weeks ago. If I can risk $26,000 for the chance to make $265,000, now that's an outlier. I want to be clear about that. I usually take most of my gains in that smaller 30 to 40% range. However, every now and then you just catch the move, right? And that's good. It's good to be lucky. Just like I always say, when I'm on the wrong side of news, I don't worry about that, because I also know I'm on the right side of news at times. So it's just one of those, like, it is what it is, ebbs and flows. Check your emotions at the door if you want to be successful in the market. But now that we're below this 505 mark, you could argue that there's going to be a potential bounce. So this is a weekly chart, my friends. But, however, the next clear and obvious key line of support is back here in that 480 to 470 range. So honestly, what I would like to see overall in the market is I would like to see more pain first. Okay? Now, I know you just said, well, you're like buying the dips now. Yes, I'm buying the dips on my 3 to 10 year outlook stuff. But overall, from a psychological perspective, I would like to see more pain before we see a reversal. So what I would like to see is I would like to see Monday be another ugly day. Overall, I'd like to see a gap down and just get a little ugly with it. We've already seen Kramer talking about 1987 style crash, and honestly, I agree that the setup is very similar. However, if you follow me on Twitter, you see me making fun of these people posting these charts. Just because the setup is similar, there were so many things that are different from what is that now, almost 40 years ago, than what we have today. So no, I don't think we're going to see 1987 style crash, but if we do, I think it presents a great opportunity. Imagine if you would have bought during the 1987 style crash. Even if you didn't time the bottom, would you still be pretty happy today? Yeah, you'd still be pretty happy today. So my long-term outlook is always going to remain positive on the market. So, having said that, like I said, we could see some bouncing, and right around this 495 level, you certainly can make the argument. What I'd like to see, and what I'm looking for, if you've been watching my videos any amount of time, is there's two real setups that I really like to kind of feel like going, okay, I think this is a bottom, even if it's temporary. Anybody who traded back in 2022 knows, even though the overall move was down, I mean, just look at it, right? Like, some of these moves back topside were absolute face rippers that if you were just piling into puts, you got the shit squeezed out of you at times on some of these face rippers to the downside. Or excuse me, back topside. So just be cautious. What smart traders are going to do is they're not going to continue to pile into puts. I mean, even some of these famous perma-bear accounts are talking about deploying cash at this point in time. Smart traders are going to wait on moves that come back to a minimum of like a 50% retrace, if not through the golden pocket, before they even consider taking another short opportunities. Pro traders, just like they don't chase 40, 50, 100% moves topside on individual stocks, pro traders do not chase 20% down moves on indexes. They will wait for a pop to short again. They will take their profits. They will hand off their bags to the end of the world people. And they're not, and the reality is most of these end of the world people, they don't even trade. And if they do, they're really shit at it. But what they do is they will influence some of their followers, and they'll just post up these targets of like, yeah, here's what I think SPY is going to do. I think SPY is going to take a half point bounce topside, and then we'll probably see a 50,000 point downside move. Like that's just what they do. They're ridiculous. Never listen to anybody. This is financial advice. Never listen to anybody who all they ever do is talk about the extremes. That is delusional. They are idiots. They live in a fantasy world. I want to be clear about that. Never listen to people who only speak in extremes. But what I would like to see is I would like to see a move. Now, this move is already very extended. Let me go to the hourly time frame. So this was the move that I talked about with my team of what I wanted to see this last week. Was I wanted to see an impulsive 1, 2, 3 move to the downside. And so typically these impulsive moves down will terminate right around our 1 to our 1.618. And as you can see, we blasted through that, right? I really thought 510 had potential to hold, but as you can see, I already had these levels off on my chart. Once we bounced off 510, we came right back up to 517.41, which is level on my chart. And I told the team, I got to see at least an hourly close over this. And we started to push up, right? I mean, this candle went from a low of 510 to a high of 522. So 12 points topside in just an hour. But what happened? Sellers pushed it back down by the end of the hour. Then the next hour, you retested and you continued to get the flush. So now that 2.618 is sitting right at 490. What did I just talk about coming over here? Oh, look, that was a lot of support back in here. So maybe that's where we see the initial bounce. And if we do make it down to here, then we bounce back up. Well, then I would want to move these targets. So let's say we come down here to about that 490 level. Yeah, so it's always funny. Look at that. The 382, which is the retrace I'd want to see, is right at that 517.41. So if we do make it this low, then I'd want to see 517.41. Then I'd want to reject and then come down for the fifth move down to that 471 level. Because when, like I said, when volatility is spiking, you can expect outsized moves in both directions. Let me say that again. When volatility is increased this much, you can expect to see outsized moves in both directions. So where I'll feel good about doing some swing trading topside is once we get a more blow off top style look on VIX. So for instance, when the carry trade happened back in September, this was a dramatic move topside followed by a dramatic sell-off. This was a blow-off top style move. We are not seeing this. If we go down here on the hourly and people always say, don't do TA on the VIX, and that's fine. People can have whatever opinion they want to have. They don't give it. You know what? But this is not a blow-off top style move just yet, right? What I would feel good about is one of two scenarios. Something that explodes that VIX even much higher from here, and then we see a dramatic sell-off intraday. Very similar to what we saw on the carry trade. Sorry, like this, right? We saw a dramatic move topside. So this was early in the morning, and then we just saw a dramatic sell-off, right? That's what I would be looking for. Something that is equally coming down as it is up. Right now, that's not what we see. on VIX. What we see on VIX is consolidation followed by more topside. And that's, depending on how you want to look at it, that's scary if you only want to see the markets, stonkolle go up, that's scary to see because that means we've got more volatility move left in the tank. Also, whether we like it or not, a lot of this is caused, by the headlines on what Trump is doing with tariffs. So if we get a headline in the middle of the night, more countries want to come to the table. We're already starting to see that with some smaller countries, but we're not seeing it with the big boys yet. Like we need the EU to come to the table. We need China to come to the table. You see that kind of stuff, and you're going to see stocks absolutely rip. So, bless your heart if you're going to pile into puts if something like that comes out. So I am looking for a more blow off. This ain't it, right? Like this is more of a, we got more downside to go. And full disclosure, I have 0 positions right now other than my long-term buy and holds with Tesla and Hood. But I have no open option positions right now. I didn't want to risk. I sold the last of my Tesla puts that were up like 140%. I didn't want to risk anything over the weekend, whether it would be a large gap up or gap down. There's something, you just don't allow greed to make your decisions, right? That's how you go broke long term. I always tell my team, run your portfolio like you're the CEO of a Fortune 500 company. Don't take unnecessary risk. I'm totally okay with risk. I love taking risks. But there's a difference between unnecessary risk and there's a difference between this is a well calculated risk and this is just being stupid. Right? And because the worst thing that can happen is you're taking unnecessary risk and you get lucky taking unnecessary risk, and then that fuels your decision to size up on the next trade, and you take more unnecessary risk, and then that one doesn't pay off for you, and then you wiped out all of your gains and then some. That's stupid. Don't be stupid. It's too crazy of a market to be stupid. Be calculated. So overall, I think our downside risk is getting down to around that 480 to 471. I do think that there is going to be an absolute face-ripping rally, and we'll see if that's an actual bottom or if it's a short-term bottom before more downside. Once again, either way, I don't care. Anybody who follows me knows I'll just ride the waves. I'll play calls, I'll play puts. I'll buy my long-term holds when everybody else is scared. It's fine. It is what it is. Some things I'll be really right on, some things I'll be really wrong on. But I'm gonna keep being me regardless of market conditions. That's how we do things. So on QQQ overall, coming back down towards a similar level would be like right around 412. I think is I'm kind of gauging everything more off of SPY than I am tech. I do think big tech has been one of the front runners here recently, so it could get hit the hardest. So that move could be accelerated to the downside when it comes to big tech. Things like Nvidia, those things get unpinned. It could get real ugly in a hurry. Now, I will say this, from a daily perspective, small mid caps actually looked a little perky, right? Also too, what you got to keep in mind is Wednesday, we get the FOMC minutes. That is not where Powell is speaking. That's just the minutes or the notes from their last meeting. That'll cause a little bit of intraday volatility. And then on Thursday, we have CPI. Friday, we have PPI. Last time, both inflation prints came in cooler. So this is going to be kind of the first one. Now, I realize it's all, the tariffs aren't even fully in place yet or anything like that. But we're getting back to that point where, inflation was the forefront. Then everybody quit worrying about inflation because it was coming down. Everybody started worrying about the economy. Now we're back to worrying about inflation again. So these inflation prints are becoming more and more important as we go. And those come out an hour before open. So keep that in mind if you're swinging any positions. Let's talk about Tesla. I repeatedly told my team that what I was worried about with Tesla is this kind of bear flag look. However, the volume to me is not as bear flaggish in here. And the reality is Tesla has already, it was kind of leading the way in this whole markdown phase where it saw a 55% drawdown. I do think that there is potential for more. Go watch the Tesla delivery numbers. But the reality is last week, even though Tesla was red, it was still only 9% red when you've got, the tech was 10% red. I mean, normally QQQ has a 10% red week. Tesla's going to be down like 20% or more. So I do think that overall Tesla held up much better. I'll post it on Twitter. It was one of my best worst trades ever, where I was holding some Tesla puts into the delivery numbers, and then it dropped on those delivery numbers, and then absolutely just ripped faces off on Wednesday. And it was my puts went from completely dead to on Friday. I got a 3,000% return on Friday. In the overall trade, I still lost money on, even though they gained 3,000% on Friday. And once again, it's just kind of like one of those you just kind of, sometimes you just get lucky, right? I am still looking for that common gap fill down here at 225. If we gap below that, I said as soon as Tesla gets below 250, it is very weak. It's very susceptible for more downside. I believe that. The next key number to look for is that key obvious number of 200. The reality is we still have this gap from their earnings in October of last year to be on watch for. Let's see here. That close is 213.65. So let me 213.65. That is going to be kind of that last gap down left to close. So there are, and I mean reality is you got ones all the way back down here to the 140s. I am fully, financially, mentally, physically prepared for Tesla to come back down here and test this trend line. That's going to be right around that 180, 170. If the markets continue to get ugly enough, Tesla can absolutely come back. I've already said that if I was excited about buying Tesla in the 200s and the 100s all the last few years, why wouldn't I be excited about it now? If I feel like they are a better company and improving and innovating and doing more, they're going to be worth a lot more in the future than they are today. So Tesla and Hood, like I said, are two stocks that I am going to be actively buying even if we continue to see a drawdown. However, I'm not going to look at actively buying anything till at a minimum I see the 225 gap fill, and then maybe even coming down here into that low 200s. Anything low 200s and below that, I'm going to be buying. You do you. I don't care what you do with your money. I only care what I do with mine. Excuse me. However, this certainly is a concerning look. Just the measured move alone, if we take it from this high that we saw in mid-February to the low in March, back to our most recent high around that 290 mark, that one move pretty much takes us down here to that level that I just talked about, around that 172. The 0.618, another huge level, takes us right here to that 213.65. That would take care of that gap fill at if we see 210.94. The 1.618, which would be our outsized extended move, takes us down to 124. So I'd be even taking out the lows from last year. So all those targets need to be on the table. I don't think that we will see, like the 124 level, but it needs to be a possibility on your table. Only a fool will just go, well, I don't like that, so I'm not going to look at it, and I'm not going to think about it, and I'm not going to plan for it. If anything, I may expect the worst and hope for the best. But hope is not a plan, right? A plan is going, here's how bad I think it can get. Anything better than that, awesome sauce. And Tesla's going to be kicking off earnings towards the end of April. I believe April 22nd is their earnings date. Yeah, that's what TradingView is showing right now. So it'll be interesting to see what they're talking about as far as, because their Q1 deliveries was obviously a massive miss. So that'll be right around the time that Elon potentially will be leaving Doge, coming back to a more active role at Tesla. So I don't really care what their earnings are for this quarter. I do care very much about what they're talking about future wise. But they said in the earnings back over here that pretty much 2025 overall could probably be a down year, and then ramping up in 2026, and then beyond 2026 is going to be awesome with their robots and FSD and things of that nature. So we'll see. Words are cool, but I'm a numbers don't lie, people do, right? The reality is Tesla's below its 200-day average. It's been rejected off of that multiple times. Its 50-day moving average is sloping down. I mean, if the market's ugly enough, you're going to be looking at a death cross here very recently, similar to Nvidia, right? And when death crosses happen, yes, it's all lagging stuff. But if you went short the day the death cross happened, Nvidia was up here at, let's see here, 120, right? Now it's down at 94. So lagging indicators, yes, but still can show some downside. When zooming out here, last time Tesla came back, let me go to a weekly look here for you guys. And I apologize, this video, it's already going way longer than I anticipated. And so I appreciate your time if you're still with me and still learning. And if you like it, thank you. Sorry. So those two bounce areas that I talked about would also be coming back here and kind of retesting the all-time high trend line that we've been underneath since November of 2021. And then we had our breakout, right? The reality is if this was a 15-minute chart, you'd be looking at, yeah, it had a nice breakout, and now it's coming back and retesting. Volume is picking up back here on the retest, so you'd want to see it kind of curve out a bottom and then start to do one of those. So that's another thing to be looking for. I always tell my team, you treat support as support until it's proven otherwise. If we get Black Monday and we get a gap down below all these levels and slice through these levels, then it is what it is. It's no longer support, so we don't treat it as such. If anything, when we bounce back up, we'll be looking at it as a resistance perspective, because that's how we do it. Okay, I want to talk about the next two plays in the market that I think can see potentially the most downside and upside. So from a downside perspective, Palantir. Let's start with the more macro look, and then I'll give you guys a little taste of my trade plan. So, Palantir, I think about all the people that were talking mad shit about me back up here at 120. I hope you're doing well. Not really. Actually, that's not true. I don't wish bad on anybody, but humble pie tastes good. So, anyway, I called the top on Palantir back up here at 120. I said at a minimum it was going to come test its 100-day moving average. It's already done that multiple times, and more than likely probably going to test its 200-day. So right now that 200-day is sitting down here at 57. We've been joking about the Great Wall of 80. Somebody with deep pockets has been snatching up Palantir and defending 80 over and over and over again. Friday was the first day. A couple things happened. Now let's go in here a little bit lower time frame. I'll explain this in a second. But Friday, not only did 80 show resistance, but this purple line, and I'm sorry, I don't know how well you can see it, but this purple line right here, that's the 100-day moving average, simple moving average, acted as resistance. I told my team, I was like, dude, obviously I was so focused on my Tesla puts and how well/bad they were doing. I didn't see this on Palantir. I should have set an alert, but Palantir rejected off its 100-day and that level of 80.59 that I had on my chart, and it's just been nothing but downside since. Then at the end of the day, Palantir was consolidating in a bearish pennant down here. So I am going to be looking at trading some Palantir puts, assuming we don't get some just insane gap down. So Palantir, sorry, getting a bunch of text messages. So Palantir is consolidating in this bearish pennant. So how I look for my short-term targets, because that's what it would be. It would be a short-term trade. Is I'd be looking at, you could look at it a couple different ways. I'll explain both. So you could go from the close back here on Thursday, and you take your extension all the way down to the low that we saw on Friday, back to the next high, and you extend that out. And that one extension takes you down to 65. The 1.618 takes you down pretty close to that 200-day moving average at 59.60. A more conservative approach is you just take the rejection at the 100-day. That one takes you down to 68. The 1.618 takes you down to 63.47. The 2.618 takes you down to the 200-day moving average. So I do think all signs pretty much point to a 200-day moving average. There's also, I like it when my trading theses are also backed up by flow, what we see in the option open interest. And there are an insane, I think we calculated on Friday, it was like 200,000 60 put contracts on Palantir for April 25th. Just an insane, and if you know anything about open interest, that's an insane amount of contracts. So somebody with really deep pockets, so just for instance, there's 200,000 contracts. Those of you that have followed my trades and seen when I make, big trades with big money, I buy like 100 to 200 contracts. Okay? So this is someone betting an insane amount of money that Palantir is headed towards 60. Now, I want to be clear, they are already in those and they're already up, like 200-300%. So you don't just blindly chase stuff like that, but they are still holding. I mean, if you know anything about flow, you need to stay on top of the open interest there. And I'm not going to babysit your trade. Like, you got to do what's best for you. But assuming if we get some type of massive gap down, I'm just not going to take the trade. I have no position as of right now. I want to be clear. I sold my Palantir at 100, and everybody laughed at me at 120. Now they're telling me I'm smart at 75. It's just the way it goes, guys. Palantir goes back to me like I just tried to make the meat of the move. I didn't buy it the bottom, right? I didn't buy whatever it was. It got as low as I think like $4 or something like that. Yeah. So I didn't buy down here in the sixes. I bought a large majority of my position right here. And then, I bought the position I had in Palantir. I bought it all right here in this channel trading area, what we call a sign of strength. And then once it ripped above 100, I said, okay, Palantir ever drops below 100, I'm selling the entire position. So I sold right here. Did I time the bottom? No. Did I time the very top? No. Did I make the meat of the move? Yes. That's what I want to do. Always and forever. Like timing tops and bottoms, that's just, I don't know. That's a fool's errand. And don't get me wrong, sometimes I do that and I'm very proud of myself when I do that. I'm not asking anybody not to be proud of themselves if they call a top or a bottom. Just know that that's not the norm. It's the outlier. I don't trade. When I dropped a 1,200% return on Nvidia, that's not the norm. That's the outlier. Very proud of it. Very happy. But I'm not going to try to chase that over and over and over again. Well, now it's time for the 2,000% trade. Right? That's stupid. So this is what I'm looking for on Palantir. If we open up in this range, I'm probably going to tail those 60 puts. Maybe I'm a little bit more conservative. I might do like 70s or something like that. And then if we open down, a perfect entry is going to be a retest back up in here. And then if it starts to reject off that, then you would look for the move back to the downside. So I think, assuming I get the entry that I want, as long as we stay below this high right here around that 77, I'm going to hang tough on it. It's going to be difficult this week traveling to the Masters and not being able to have my phone the way that I want to. But this is just one of those trade setups I really like. I want to see the thesis play out. And I'll put my money where my mouth is. Probably take a smaller trade than what I normally do. But we'll see where we open up. So if it does gap down, obviously it can gap and it just can crap and I'll just have to miss the trade. But certainly any type of gap down, if we do start to push up at open, we retest these levels, I'll take it for sure. Top side trades, I really like Rocket Mortgage. They've made some good acquisitions lately. They closed above their 200-day. Obviously, you've got this wall kind of right around this 15-16 level, but you go to a weekly basis, put in a very high volume, bullish engulfing candle after a very large drawdown. This drawdown was a 52% drawdown. So this is kind of what I always go back to, just like when companies have 50-60% pullbacks, if you believe in the company or you want to trade it or anything like that, you just buy them. That's what you do. If we zoom out, right, it's not, the cleanest, but basically what you did, so this right here, so the previous weekly support, you came up, you rejected, you came down, you refueled, now you're making another push. It's almost like it's like a big cup and handle. Look down here. So if the market does well and recovers, Rocket Mortgage, I think, has potential to be a really nice trade to the upside. So here it closed at 15, potentially pushing back towards 20. Even just short term, that's a 30% move just on shares alone. I think it's a great looking setup. If we go back here to the daily, right, when the market was just absolutely dying, and it's just got those setups that I like, right? So here's the 50-day moving average. So you closed above, then you had a low volume day to kind of come back and retest the EMAs, and then you had a day where the volume increased. You pushed through the 200-day. All your 921 EMA started to cross up. That just means your 9 EMA crossed up above the 21. That's what you want to see. You want to see your lower time frame EMAs crossing through your high time, longer term EMAs. That shows you where the momentum is. I don't trade off of EMAs just because they're lagging indicators, but they do add another piece to my puzzle. At the end of the day, that's all I'm trying to do. I look at all the pieces on the board, and then I go, okay, what's the best way to put my picture together so I can see the picture of the trade? That is what I do. And when I go, okay, I think this looks good topside. So I like my EMA setup. I like my candle setup. I like my volume setup. I like my price action setup. It's closed through that 200-day. Now you are up here at resistance overall. So we don't buy resistance, and you can see at the end of the day, it rejected off that resistance. But you start clearing through 15, and especially if you get up and through and you retest and start to go, it really looks clean at that point in time, especially with all the, the interest rate talk concern. Are they going to have to make emergency cuts? You just got to go where the money is, right? My buddy Orlando, he always says there's always a bull market somewhere, and I agree. So there's a great looking long setup right there at Rocket Mortgage. But you can see last few times it rejected off this bearish gap down, but every single time it's getting a stronger push. That's only going to hold so much before it just blasts through. So do what's best for you, but if we look good, Rocket is definitely one that I think can have a really nice setup. And if overall, when we win in doubt, zoom out, here is our last significant swing low. So if we take an extension, I just messed that up, but we'll correct it. So if we take our extension from this low to this high, back to our next low, then that 618 basically sitting right up here where it double top before. So that 19, that's kind of what I was talking about, 1920. But you start getting an outside move, market really recovers, 30 to 40, even all the way up to 60. And look how these fibs, right? Like, look, this 1.272 fib right here pretty much lines up with the all-time high. This is why I always am big on getting good with fibs. Okay, let's take a quick scan of some other stuff. Nvidia, I said it was coming down to that 95. Felt like it took forever to actually get here, but now we're here. So this one's going to be interesting, like I've already mentioned. Yes, it did have that death cross up there. But if we do a fib from over here, from those lows in April, because the big scare here is the growth scare, right? Is the economy, are these companies going to start slowing down their CapEx spend? Which obviously Nvidia would be one of the most hurt if that happens. But from our most recent swing low, and we've seen like a 30% drawdown here. Yeah, almost 40. drawdown at this point in time. So if Nvidia is a company that falls into the way Hood and Tesla falls into me, I don't think it's a bad time to buy Nvidia at all. However, I've made the case where it could easily, the market gets ugly enough, start coming back here to the low 50s. So you just have to decide, is that something that you want to ride out? The weekly look is pretty ugly, right? The next big key level of support is down here at that 75. But then if you do break through that, I mean, it does. It looks like it could come all the way back down to 50. And when you zoom out, and if I want to go full trend spider right here, so they post some of the most ridiculously stupid charts. They were like, this is the return to normal. And then Nvidia's going to negative $10. Such a terrible account. But anyway. But these are going to be the things that you got to watch for. Earnings season is going to tell us a lot as far as the guidance, the CapEx spending. And if large companies start reducing their CapEx spending or acting like the demand is going to be decreasing, or they don't need as many chips as they thought they would, and Nvidia is going to be one of the ones that absolutely gets hit the hardest, for sure. So honestly, not much to talk about there. It's coming back to, some previous long-term resistance. Last time, if you would have bought at 90, you could have ridden the thing all the way up to, 140, 150 bucks. So doesn't necessarily mean that's going to be the case now, but certainly down in here, I think it's worth potentially taking a shot at. Just have your risk to reward managed out. GME is one, obviously did really well, kind of like a rocket, had an 11% update. It's, there's a lot of things I don't like about Ryan Cohen, and there's a lot of things I don't like there's things I don't like about every CEO. Like, nobody's perfect to me, just like I'm not perfect to anybody else, except for my wife. Maybe she thinks that. No, she knows. If anybody, she knows how imperfect I am. But it's had a good day, 11% day. I love the fact that Ryan Cohen bought 500,000 shares of GME. I will always respect somebody who puts their money where their mouth is, regardless of how that turns out. It's a great looking setup. Go watch my GME video. Nothing about this setup is invalid based off of the video that I did a couple of weeks ago. But it's certainly one that if you believe in the long-term value of the company, if it's something that you want to be invested in, it's come back to not only Roaring Kitty's cost, but Ryan Cohen is showing you, hey, I'm a buyer down here in this $20 level because I think it's going to be worth more down the road. So if you believe in something like that, this is a good setup. That's all there is to it. I'll really think it looks a lot better once we start cresting back over that 25 area. Just kind of scroll on. Don't love Meta. SoFi is one. So banks, guys, a lot of big banks have their earnings on Friday before open. So keep that in mind. But SoFi and Affirm, like that's a really good looking candle on Affirm. Very high volume, could easily put in a Morningstar look. So you'd look for like a gap up and a move like that and a move back topside. That's a very good looking candle. SoFi, kind of the same deal. Much higher volume. Not a super clean hammer look, but coming back, took care of this gap that was right here at the end of October. So especially if SoFi can get back up above that $11, $12 range, I really like it. Another thing, if we go from here, from these lows to here, look at that. Came right back down to that 618, that discount zone. Real nice bounce. So those are ones that I would keep on watch. One thing that I'm not in love with, guys, is Bitcoin has been holding up remarkably well compared to what the market is doing. If you would have told me the market was, coming back to these low 500s, I would have told you Bitcoin was probably already back to the low 70,000, mid 60s. And it's starting to show some weakness. So as I'm doing this video right now, it's already dropped from 83,000 down to 79,000. I know that that's not really anything when it comes to Bitcoin. But I've been wanting and saying for a long time, I want a retest of these highs back around that 73 range. So overall, my thesis for the market this week is I would like to see some ugliness at the first part of the week, followed by a rebound towards the end of the week. But that rebound will only happen if we get like some good inflation data. So at the end of the day, the two big candles that I'm looking for potential bottoms is I either want to see something that is a massive gap down, but then we pretty much push up all day. Like we hold the line at the bottom of the day and pretty much push up and the volume starts to come in. Or I want to see a massive red to green move where let's say we gap down and we open like at 495. We drop all the way to like 470, but then we recover in the middle of that day and close back above where we open. Those are with a large amount of volume. Those are the type of moves that I'm looking for potential bottom. Hood, I like the hammer candle and the volume that came in. It defended its 200-day moving average. Like I said, if it came down and tested that 35 and the 200-day moving average, I was going to be a buyer, and I was, and I will continue to be a buyer up here. But Hood is also sensitive to crypto, and so that's kind of why Hood has become the wagon that I want to attach myself to, because not only do I get the crypto, I'm kind of attached to crypto with that, but also too you get the brokerage, you get the ecosystem, all that. There's a lot of things that I like about it. For me, it's kind of like if you go. I'm not a big fan of MicroStrategy, just from a standpoint of if you're going to go buy MicroStrategy, just go buy Bitcoin. Is the way that I feel, because that's all they're doing. they're Temu Bitcoin, and now GME kind of sounds like it's becoming Wish.com MicroStrategy. They're just like MicroStrategy Lite or whatever. That'll get the trolls coming out. Colin, you don't understand. It's about the Pokemon cards. Which I got some of those too. Let's see here. Hims is another one. I don't love the weekly look, but I do kind of like the daily. I wish it would have held on to that 200-day moving average, but it's another one I kind of had my eye on. It's experienced a 67% drawdown. So that's not a bad look. Let's see here. Amazon. So even if this is kind of a spy candle that I'd be okay with. It's Amazon really held up pretty well. I mean, even tried to go green on the day for a second. Microsoft, I think it was terrible. Just to be clear. I posted this on Microsoft back when Microsoft was like 420 or something like that. This is just about as clean of a distributive looking chart as you can possibly get. I said multiple times, I think Microsoft is coming back towards at least 350, and it closed at 359. But based on this chart, we got to have further to go. I wouldn't even consider anything. Well, you are in the 618. But, man, that chart is just ugly. It's ugly with a capital fugly. It's bad. Same thing on MU. Thing is terrible. Just trying to go through. Yeah, I think that's just where I'm gonna leave it there. So at the end of the day, don't buy anything right now that you don't have a 3 to 10 year outlook on, and you don't believe can at minimum 3 to 5x from where it is today. And then if you get it more on sale, sweet. Don't try to time the tops or the bottoms. Stay focused. Try to ignore the noise, because there's a lot of it out there right now. Try to ignore the noise that is going on. And at the end of the day, like I always say, make a decision that you can put your head on the pillow at night and you can go, I feel like I did the best that I could. Doesn't mean it's going to work out. So you need to have, just as much as you need to have a plan of when you get into something. When is your plan to get out? Too many times I tell my traders this all the time. You had a great plan to get in, but you had no clue what you were doing once you were in. You had no clue of where's my plan invalid? Where do I need to get out? How much of a loss am I willing to take on this deal? These are all questions that you have to ask yourself. Wait for it before you're in the trade, not after. Before. Have a complete plan of what to do before you put any of your money on the line. I hope this video was helpful to you. I won't be able to do too many updates this week. And honestly, if I'm just being as honest as I can, like, I'm stressed. I'm not going to lie. I know I'm going to enjoy being at the Masters, but I'm stressed that the market is this shaky right now, and I'm not going to be able to help my team, talk to you guys on Twitter, and I'm just gonna have some stressful moments, no doubt. I would love to see some signs of, recovery or at least consolidation while I'm there. And like I said, once I actually get there and I get to the court, I'm gonna be focused on. I'll be in the moment, so you can save me your message, but it's not easy, right? It's the reality is we're seeing some drawdowns that we haven't seen since COVID. And that can make people, a little nervous, a little scared about the future. And only if you truly believe, do you truly believe in your heart of hearts that, like, this is the end of the world? This is the end of the economy? Cooler heads aren't going to be able to prevail? And like I said, if that's the case, you're going to have a lot more things to worry about than losing money in the stock market. So if I see a quality company or an index that has a massive decline, and I still believe that there are brighter days ahead, which I do, I'm going to buy. I'm going to seize the opportunity. I made an insane amount of money during COVID because I seized the opportunity. And I plan to do it again if I see it. I'm already doing it. I already bought Hood on Friday. Hopefully that pans out. If it doesn't, okay. It's part of it. Making poor decisions is just part of trading. It's part of life, part of everything. I've got a plan of exactly what I will do if I go, you know what? I don't want to be in this anymore. So have a plan, be ready, and I wish you guys all the best. Much love, and I'll catch you next time.